This is James Altucher at TheStreet.com TV. I'm here with Mad Money host Jim Cramer. And Jim, out of all the things the bears worry about with the economy, with the U.S., the thing that worries me the most is this startling statistic that I just read the other day. 7 million Americans are 100 pounds overweight or more. Right. And $33 billion a year are spent on health care costs for the obese. So we set up on StockPicker this index, the Obesity Index. Right. And some of these companies are just blowing away earnings. I wanted to ask you about them one by one.
Sure. I have to say that, again, when we're looking for themes, there was a great guy used to be in the business, a guy named Bob Farrell at Merrill Lynch. And he always said he tried to isolate 10 themes at any given moment that were really important. At the beginning of the year, he would give a talk, and everybody would go. And he would look for themes that would, when the market pulled back, you'd be able to see these were the rocks. These were the things that stood out. This theme, obesity, is the equivalent of, at that point, it was email was a theme. And I see where we're going here. StockPicker has a bunch of these. Obesity stands out to me as something that as the market comes down, this is your opportunity.
Well, it's interesting because let's say, consumer spending slows. Do you think people will still pay their membership dues to Lifetime Fitness?
We know. One of the things I do I work with Simon & Schuster for my books, and diets always sell. Diet planning. Now, do people stay on it? Not necessarily, but it's a growth business. And given the fact that, if we were a nation that was getting thinner, it isn't a growth business. We're a nation getting fatter.
Well, okay, so what do you think of Nutrisystem right now, NTRI?
I have a friend, Joe Bessiker from Emerald Advisors, and when the stock got hit to the mid-40s, he came in to see me. He's a big shareholder. And he just said, look, like it or hate it, over the next 6 months, because it's got this blowout promotion for men, you can make good money in it. I had felt that the shortfall was one that the bears had correctly flagged. I now look at it the way Bessiker does. I think it's got real momentum. Long or short, you want to be in it.
Well, I'll mention also the Emerald Growth Fund, which has had excellent returns. Right. We've got a profile of them on StockPicker. We have all their top holdings.
Great returns.
So yeah, they've been a good growth fund.
One of the things that StockPicker causes you to do is just say not all owners are created equally. The fact that Bessiker and Emerald's done well, the fact that you can see their stocks and what's done well, therefore gives the benefit of the doubt to Nutrisystems and against the bears in the stock.
Well, what do you think of Herbalife, HLF?
This is one, it's very funny you mentioned this because Mike Comeau, Breakout Stocks newsletter, has had tremendous success. He's well above the S&P now. And this, when I asked him what's his favorite name, he said Herbalife. And I said, too controversial for me to use on TV, if only because it is a multi-level marketing company. And I'm uncomfortable with those and have historically blasted them. But he creates quite a story by saying it rejected a takeover, it's got some earnings momentum. This is one, and I rarely do this, is to say everybody's got to get comfortable with this. I can't get comfortable with multi-level marketing, even though the numbers make it seem like it's very cheap.
It's true, because I guess it trades at about 13 times forward earnings.
It's way too cheap.
But I guess with a multi-level marketing company, you always have to look at how many of your marketers are also your customers.
Right.
So then it gets tricky. It's the whole prepaid legal.
But, maybe it's Avon. Yeah. Right? And Avon just reported a blowout quarter. So the jury's out for me, but not for Comeau.
What about Lifetime Fitness?
This is just a good company. I've had the CEO a number of times. This is a company that has the nicest facilities. This is an excellent baby boomer play. They're doing some urban stuff. Now, people felt that's because they've run out of suburban. They're primarily suburban. No, they're just very shrewd operators, and they know that there's lots of people who are younger that wants to be in. This is a very well-run company. Of the ones we've discussed so far, it's the ones I like.
Well, now, what's interesting is with all of these companies, customers are throwing their money at, but nobody really uses the services. Like, I'll join a gym and I'll go twice, but I'm stuck with my annual membership.
Great gross margins.
Yeah.
That's the secret to great gross margins. People pay up front, right? And then they can do whatever they want, these organizations. And then they don't have to, their cost per customer is much lower than would be given what you would think.
I mean, it's almost like an insurance company in a weird way. Like, you pay your money, but you might not get the money or services back.
I like those businesses.
Yeah, that's a good business. So, all right, well, this is James Altucher and Jim Cramer here at TheStreet.com TV. Thanks.